Welcome to the end of day review for Tuesday, the 12th of December 2023. Starting off with the economic calendar, there were two significant news releases over the two sessions. For the London session was the GBP claimant count during the Frankfurt Open. That was positive. That was positive for the GBPUSD, and as a result of that, we were only allowed for that session particularly to trade longs. In terms of the New York session, any long trades taken in GBPUSD would have had to be closed prior to the CPI news release at least an hour or two before, which would essentially mean by the time of the London lull, it would have been a good idea to close these trades. In terms of the CPI news release, this was positive for the USD, although quite not by a significant margin, although given that CPI is quite sensitive, the positive nature of this news release would essentially mean that we could only short GBPUSD. Jumping into the chart, starting off with the 4-hour, market structure remains unchanged from the previous reviews, with demand still being bullish market structure still being confirmed. In terms of reason to trade or daily bias rather, we have reasons to trade in both directions with the pullback phase. Although having achieved its target, there is one last barrier that price needs to overcome before we can conclude that the pullback phase has officially ended. At the moment, we're reacting to this pro-trend extreme right here. We have reacted to it, and quite late in the day, actually, for the CPI news release, we wick this pullback phase chalk level, suggesting that the 4H primary leg has been validated. However, up until this point, we have validated the primary pro-trend leg on the 15 and 5 minute and perhaps the 30 minute as well. Overall, starting the day, we were roughly around here with the primary bias to long, and then once we had 4H backing with the pullback phase, we could consider shorts if we were able to validate the IRL on the 15 and 5 minute time frame with changes of character. I'll go on to the 15 minute to essentially support what I've just said, but what you can see is on the 15 minute we've had the change of character right here. Since then, demand hasn't really taken control, and thus there's reason to believe that supply is likely in control in this area, specifically under the primary leg. However, like I said, we do need this change of character to actually validate the IRL within this leg to begin targeting it. Subsequent to that, we actually do get this, which then enabled us to consider shorts within this area based on the idea that supply is holding and the secondary leg is valid to trade from. Just give me a second, something happened with the bar replay. Okay, we're back. What I was saying is, given that we have the jock and the fact that demand is yet to hold, and will only be validated as holding once we body break this, we do have this area right here to consider shorting within, provided it meets our requirements. What we could have seen is when the GBP news release was released, given the positive nature thereof, we could only long. I would have had an entry set around here, considering the fact that we need price, during Frankfurt to actually trigger us. And while it did wick quite slightly, I don't think it would have been sufficient enough to actually get us tagged into the trade. And if you were lucky enough to be tagged in, then you would almost immediately close the trade because the news release suggests longs rather than shorts. So that would have been a break even, maybe half an hour to 1 hour, depending on how you managed it, but overall shorts then became invalidated. In terms of trying to catch a long within this, there was scope for that, based on the idea that the primary leg is validated because of this 15 minute jock, which then gives us this pro-trend primary leg support OB. Because of this support OB, we could look to find order flow shifts within as a result of the reaction to this 15 minute unmitigated primary leg support OB. We do have this jock level right here. However, within this area there aren't worms. There's a fair value gap but no worms, which means I'd like this precise OB to be tapped and then break of structure to then validate that demand is in control to actually make this make sense. If you were more lenient, you could perhaps consider that the imbalance was tapped and then we had the break of structure, which then validated demand was in control, and then using the fibs perhaps from yesterday's low of the day to the current day extreme, you could anchor one of your fibs entries, or you could anchor your entry to this fib using this as liquidity in the leg and using that as your stop loss, just merely on the fact that there is lots of liquidity in the leg and there isn't necessarily a need for price to come all the way down. However, like I said, I wasn't comfortable with validating that demand is actually holding within this area, and thus I didn't consider this long entry. However, if you did actually take this entry, it would have probably been a good idea to take profits around here at 1 to 1.5, or if you were a bit braver, perhaps just before this CPI news release at 1 to 2. However, like I said, none of these longs or shorts were valid. Price pretty much whipsawed, so took yesterday's high out and then yesterday's low out, and in the process, invalidating multiple London session highs of the days and lows of the days. Overall, I think there was scope to trade reasonably safely within this range. However, it's far from ideal, and the risk to reward is also far from ideal. So, however you chose to approach it, I hope you took cognizance of the actual news releases and didn't over risk on days like this. It's really with over risking or getting into positions that are somewhat not high probability. But yeah, overall that's the end of the day review for the 12th of December, and we'll chat again soon.